Good afternoon, Blue Line Traders. I'm Sean with Blue Line Trading, and this is your weekly watch list video for the week of February 13th of 2023. In this video, we're going to cover the weekly watch list. We're also going to cover the daily market update, and we'll go over the CPI event for tomorrow. And before we jump into things, I just want to mention, if you saw the chat room yesterday, we started doing something new. We started putting out a content schedule for the whole week. That way you guys as members will know when we're releasing content and you can plan accordingly with your trading. So without further ado, let's jump into the update. Starting with the weekly trade report, where we go into the performance of last week, things pretty much slowed down quite a bit in the trading department last week. And that was due to the volatility and unpredictable price action within the lower degree substructures. This made forecasting the lower degree movements of the market more difficult. Luckily though, we were very strategic in our approach to the market coming into the last week. We stuck to the safest money, which was in the indexes, and we went into the week hedged up using Meta as a common share short trade. This worked exceptionally well because Meta was already pretty overextended to the upside, and when the S&P pulled back a little bit further than we had anticipated, Meta pulled back substantially, which more than covered the drawdown on the SPY calls that we had, which did allow us to still have a pretty profitable week. So overall, we are happy with our performance last week. Now, as far as the SPY calls that we're holding go, we did have a little bit riskier of an entry than we typically like to have, and that did give us a little bit of drawdown. But again, the Meta trade that we are holding as a hedge did cover the drawdown that we had. The best way that I can describe what I mean by a higher risk entry, which is what we had on the SPY calls, is the market kind of has three stages of hitting a zone. The first stage is the arrival, which is when the price action reaches the anticipated zone. The second is the reaction, which is what buyers or sellers do when that zone is reached. And then lastly is the test, which is the back test of the critical level that was originally reached. That back test can be successful or it can fail, which is why that back test is always the safest entry area. So where does the S&P currently stand? Well, we're going to go into that right now, but I want to remind you guys that this does not include today's price action. So last week, the market continued to pull back from the 4200 zone or the 4207 zone, and ultimately the pullback lasted the entire week in a series of lower highs and lower lows, which were very choppy. We finished the week and closed in the 4100 zone with a really nice long lower wick, and at face value it does appear to be bullish. But at the same time, there is just enough evidence to also support a case for lower prices on the short term. The good news though is I still see room for bulls to remain bullish all the way down to about the 4,000 zone, and I do still anticipate the 4,300 zone as our next target to the upside as long as that 4,000 zone holds as support. A break and close below the 4,000 zone would open up the doors for a more bearish outcome. So to keep things simple, which is our goal in 2023, our next upside target remains to be 4,300. But a break below 4,000 could potentially invalidate that theory. Currently though, we are leaning towards the opinion of the current zone, which is the 4,100 zone where we closed on Friday, holding, and the substructures support that. On the following two slides that we're going to take a look at, it's going to show our theory, which we've been following for a couple weeks now, and it's going to show you the substructure coming down from the 4207 zone, which is very clear, and it supports a move off that bottom. On the slide is our theory, and this is the most valid theory in the market that I see right now. It's the three-wave movement to the upside. It can be an ABC or it can even be a WXY, but I'm leaning towards an ABC at this point because of all the fib targets that match up. Now the next target to the upside is 4,300, and the only difference that I made on this week's watch list on the theory is I removed some of the substructures because the substructures on the lower degrees are getting a little muddied and we're trying to keep things as simple as possible. I think the best thing to focus on here is we had a nice long lower wick on Friday. It tested the pivot perfectly. We found liquidity, and today we did close higher. And we'll get into today's price action when we get into the daily market update. But ultimately, we do still need to use some caution because, as I said before, I do see room down to about 4,000 where we can still remain bullish and this be valid, which means going into CPI tomorrow, there's a high probability that we could get a fake out reaction because that's how a lot of these releases have played out. And what that would look like is if that report comes in hotter than expected or we get a bearish reaction, we get a dump down towards 4,000, but then we get the true reaction where we find support and then we climb to our next target, which again would be in the 4,300 zone. So we have to keep an open mind to that, especially if you're in bullish positions. So on the screen, we did use the SPY for this, but it's the substructure coming down from the 4207 zone and how it relates to the SPY. What we have is a very clear three-wave structure to the downside. The fib targets match very well, and while there are multiple ways you can draw this, most of those ways would suggest that this pullback is over. Touching on the Dow and the NAS, the Dow is on the left, NAS is on the right, and we're on the weekly time frames. You can really see how much indecision there is in the market. You have doji candles the last 2 weeks on the Dow, and on the NAS we had an inside bar, which was a complete change of the bullish behavior that we've been seeing, which ultimately you can see why the lower time frame structures got so indecisive towards the end of last week. And a lot of that probably has to do with the market going into somewhat of a holding pattern until CPI comes out. Speaking of CPI, let's jump into the economic calendar, and this week is going to be a big economic week. On Tuesday, which is tomorrow, we have core inflation for January and the inflation rate coming out, and that's going to come out at 5:30 a.m. And then on Wednesday, we have retail sales, which is somewhat important. And then we have PPI on Thursday. Those are going to be the biggest events this week, and you do have to use caution because these are likely to increase the volatility and the trading difficulty this week. At this point in the video, we're going to go into the daily market update, and then when we're done with all that, we'll circle back and go over some watch list tickers. For the update, we are starting on the S&P futures chart on a 15-minute time frame, and I've got your close from Friday marked right here. When we follow the median line in red, you'll notice that the overnight session was about 70% net short and 30% net long. The first portion of the session was the net short portion, and the second portion was the net long portion going into today's open, which means that the overnight low was put in at about 5:30 p.m. last night, and that was in the 40.78 zone. And then from there, we went into a sustained uptrend that lasted the entire session, and at about 4 a.m., buyers did go for conviction, and they got it. They broke the high of Friday at the 41.04 zone, and brought the price action up to the 41.15 zone, which marked the overnight high. From that high, they backtested Friday's high going into today's open, and we opened the daily session on this print right here on good, healthy volume. From there, we got a second very bullish print, and then we continued in an uptrend that was sustained and lasted the entire daily session and closed at the 41.50 zone. The big question of the day is going to be, from this point right here, which is the bottom of the consolidation from last week in the 41.60 zone, is this the bottom of that consolidation? And should we be looking up at 4,300 from here? And to answer that, we're going to look at all the evidence that's available to us. Starting with the price action, and we will ultimately start with the overnight price action, but beforehand, I want you to just take note of where this bottom is. And this was the Thursday overnight going into Friday, and it was the bottom right there of that consolidation, or potentially the bottom. Now, when we look at the overnight session, it's going to be bullish. And the reason it's bullish is we opened with conviction, and then initially buyers gave it up, and sellers actually got very aggressive. Look at this. They pushed it all the way past the median line in one bar and then got follow through all the way down to the low. And this was the overnight low, but if you look at the previous low, this is a higher low. Now from there, they took out this high, and they did it with conviction and held that conviction going into the open. That is why this is bullish. That is an uptrend, and it's an uptrend off of this area right here. You have 1, 2, 3, 4, 5, 6, 7. So you have the series of higher highs and higher lows that make an uptrend here. Moving over to the daily session price action, it is also bullish. And it's bullish because it's continuation from the overnight, and the opening prints are the lows, closing prints are the highs. We're currently holding this area in tonight's overnight market as of right now. When you come down to the intraday volume, there's a lot of green in there. And that tells us that from a time perspective, buyers had more control of the market today, and they showed it in the price action. Pulling up the session-based volume profile, you'll notice that we have a higher point of control and a higher value area, with the session volume profile shape being an uppercase P. And when you combine that with the fact that this is more than likely mostly buying pressure right here, and the point of control is up here towards the top of the range, it suggests that the high is likely to be breached, which means that we could see continuation to the upside from here. One thing that I do want to point out before we move over to the daily is we do have some divergence building on the RSI, but keep in mind this is on a very low time frame, and we do have a substructure in here, and I haven't measured it out completely yet, but I can kind of see a 1, 2, 3, 4, and 5 potentially, which means that this could be substructure 1 of something. And when we look at the peak of wave 3 and what could be wave 5 or part of wave 5 building, or even if it's right here, that divergence confirms the structure, which further makes me believe that we're going to have a structure coming up from here. Moving over to the daily time frame to look at our daily candlestick location and structure, the structure itself is bullish. And that is because we have a higher open and a higher close, and this is a nice long candle. But the location is a little bearish. The reason it's bearish is we clearly have a downtrend right here off of 4207, and there's a potential that this could break and that this is not going to be a worry, but it hasn't happened yet. And as of right now, we still have a downtrend right here, which would make you think possibly this consolidative move is not over. And again, remember, this is a valid bull structure down to 4,000 or that area, which means that we could see this consolidate down much further before we go up to our next target. And again, with CPI tomorrow and the fact that historically we've seen a lot of fake out reactions, I could definitely see that happening. We get a fake out to the downside, and then from there, we pop up and we go hit our target and we continue up. Coming down to the daily volume, it's also somewhat bearish. And the reason I'm saying this is somewhat bearish at this point is because if this structure was ending to the downside, this consolidation, I would like to see some volume. And as of right now, off of our top right here, this consolidation is actually very healthy. We have decreasing volume as the price is going down, but the volume hasn't started to tick up yet, which would bring into question if this is part of something new or not. If you're following just this, then no, this would not be new, unless tomorrow we broke this trend line and we had good healthy volume. Now at the same time, if you ask me which way I'm leaning at this point, it's hard to say, and the reason why is there is an explanation for this low volume and this nice bullish candle. As I've said, there's a very high potential that the market is in a holding pattern and waiting for the reaction of CPI to make its moves, which means that people are limiting their risk. The other thing that I want you to look at here is this is the visible range profile. So when I just make the range from our bottom to our top right here visible, this highlighted area is the value area calculated from all this, which is where 70% of the volume is. When you look at it, the top of the value area, we broke out of it. That was the pivot. This candle tested the pivot very well, and it dipped down in here. And I believe, like I said last week, that this is a spring test, a test for liquidity, and they found it. Look at this wick. And not only did they find it here, we have a wick today too. This tells me that there is interest in higher prices. But for that to happen, we do need to break this trend line. And I would like to see some volume come in. Now, again, this volume is pretty substantial when you compare it to over here and before all this corrective move started and COVID and all that, but ultimately, relatively speaking, I do want to see a little bit more volume coming out of this zone to tell me that we are going to come up and hit our target. Moving over to the market internals, and we're going to start with the VOLD. The buyers did have a pretty strong day today. You can see that they trended up for most of the day. There's not a lot of chop in here. Let me see if I can make that a little bit bigger. And they broke the benchmark. And clearly, from these down days that we had last week where we saw consolidation, there's a clear shift from this point taking place. On Friday, we started to see no more trending downwards. Nobody broke the benchmark. And we started to see a battle for control. And then towards the end of the day, buyers kind of had that pop. And then look today, they brought it all the way back up and broke the benchmark. That tells me that there's a possibility that they're taking back control of the market. But again, we have those other red flags that we got to keep an eye out for. Coming down to the ADD, we did open very well balanced, right near the zero line. Price action confirms that. And the buyers had a pretty healthy day here, which tells me that continuation is possible. And what I mean by a healthy day is we are matching the SPY price action very well with the ADD, and we didn't get too extended, which means that there's room to the upside. Coming up to the tick is neutral, which is very odd, especially with a day like this, which does bring in some indecision. You would think for the trending day that we had to the upside, that nice long candle, we would have seen some extreme ticks to the upside, but we didn't really have any. And that could again be because there was light volume today because the market's in a holding pattern. When we come down to the cumulative strength portion of it, again, clearly just like we saw here, we had a shift back towards the buyers, and buyers built very strong cumulative strength. So is this a clue that tomorrow things are going to go in our favor? We're going to have to wait and see. Coming down to the S&P sectors, you'll see that everything is almost green except for XLE, which actually isn't that bad of a sign. And risk on was leading to the upside. Now to combine all our evidence, we're on ES1, I'm on our theory chart, and I have the substructure in here, and I'll get to that in a minute, but to give you some reference, I'm going to zoom in here. This is where 4207 was hit, and you can see it was hit very decisively, and we pulled back from there, and this is the consolidation we saw last week. And this point right here, coming into today, something changed, and this substructure that I showed you earlier in the video is this area right here. We clearly have 5 waves down, 3 in between, and 5 down, and you can even count it a different way where you have 3 down, 3 up, and 3 down. So either way, we have a 3-wave movement right here. And when we measure that 3-wave movement, A, B, C, 100% extensions right here. Yeah, we violated it a little bit, but we had to close above it. We're allowed to do that. Hit it very perfectly right here, played in this area, went for liquidity, found it, started to move up, back tested that area, and went. That's very telling. And at the same time, there's a lot of evidence that, yeah, the buyers might not be as strong as I would like to see them, especially on the daily time frame. They haven't broken this, and the volume's not that great. But what the evidence does show us is that there's a clear shift taking place, which means that we might not be done shifting towards the buyers, which means that that control and that strength is still on its way. So I've already shown you on the daily chart earlier, but I'm going to show you on the substructure chart on the lower time frame what needs to happen. We would like to see some volume, but again, it's not the most important thing. What is the most important thing? To go straight up from here, we need to break this. We need to break 4150 and get follow through and go. And if that happens, what we mentioned last week and this orange count is what's taking place, which means that we would come up to about 4250, we'd pull back in the substructure, and the pullback would probably come to around 4160, 4170, and then we'll ultimately go to our 4300 target, where again we'll see more higher degree consolidation before we continue on this rally. Now, one of the major arguments that this is not going to happen, and this is most of the bearish people talking right now that can't believe the market's going up, their argument is that why is it taking so long and why is this area being so difficult to break? That tells them that it's not going to break. Well, you got to think strategically here. We're going to go to a higher time frame. We'll go to the daily. There's a lot of liquidity here. And I'm talking about liquidity to the downside. Look at this candle right here. This is a lot of shorting activity. Look right here, same thing. A very bearish day right here. Same up here. There is a lot of shorts in this area that are defending their positions. And ultimately, I'm guessing that they didn't think that they were going to get above here. Because what this structure basically tells you is this area sellers were defending, and ultimately buyers overcame them. And when they overcame them, look how aggressively we shot up. Somewhat of a short squeeze, because what you had in this area from this point right here and over here was shorting, which means that their stops were up here. So when buyers overcame them, they took out the stops and we short squeezed to the upside. We started to get divergence because we got overextended because of this squeeze, and that's where all those shorts started piling back on. They piled all the way back on and they came back down, but buyers are defending where they broke out. And that's why we have this wick. So all buyers need to do is break this and we're going to go. And I'm guessing that once this trend line breaks, the trip to 42.49 is going to be quick. And it could be so quick that the pullback for here might not even be much of a pullback. When you think about it, when we pull back in the purple count over here, it's pretty sharp. Laws of alternation would state that potentially this is going to be a flat correction up here and it's going to be sideways, and we could go more or less what it would look like on a chart almost straight up to 4,300. So it's really going to depend on how buyers and sellers act with the information they get tomorrow. The other scenario here is we violate this pivot and buyers give this area up, and the next pivot, which would be the line in the sand somewhat, would be the battle area. And that's why I'm saying it's possible we get a fake out reaction because we violate this area, buyers give it up, and we fall. And this area, if you look on a line chart, we can go down to about 4,000, and we can even violate it a little bit as long as we get a close above. So it's very possible that this structure stays intact and we come down further and then go up. And that would turn this orange count into somewhat of a diagonal pattern to the upside, which I'm okay with. It's going to have to prove it to me because they're not as reliable, but still, I'm still looking up until we completely lose 4,000. Then I'll reevaluate the chart and look for what could be happening, and that could be more bearish at that point. But as of right now, to answer the big question of the day, I'm leaning towards us still going up. And if this pivot holds, I think we're going to go straight up. If it doesn't hold, we might test 4,000 and then go straight up. And if 4,000 doesn't hold, well, then we need to reevaluate how bullish we're being for this bear market rally. Lastly, we're going to go over some watch list tickers. And if you saw the watch list, it's a little light, right? And that was not by mistake, though. We did that on purpose. And we did that because last week, towards the end of the week, things got a little bit unclear. It's not completely unclear, but a little bit, which means that we're scaling back a little bit as well. What differentiates good traders from traders that don't make it is anybody can learn to read a chart. It's not that hard. But knowing when to strike and when to pull back is what that differentiating factor is. You need to be able to control your emotions. You don't always have to be in a trade, and you should only trade when you have clarity. We started to lose a little bit of clarity, which means that we're not completely stopping our trading activity, but we're pulling back a little bit. And once we get the clarity, which is probably going to be tomorrow, we'll start to get aggressive again if the charts tell us that we can. And one thing that I see very telling on the SPY is look at the RSI. We started to consolidate from this point right here and we came down. When we came back up, today, there's still indecision here. because you have what could be shaping up as bearish momentum. And look at the last time we had bearish momentum. We pulled back in this connector wave. And when we came back up today, it's not confirming yet that this is going to become bullish momentum again. I'll zoom in here so you can see it. We have a gap between the moving average and here. So ultimately, on the SPY, it relates to what we're seeing on ES. Ultimately, we're still looking up at about 4,300. That relates to around 427 on the SPY. So that is our trade idea. That's been our trade idea. And we're actually in SPY calls still. And those SPY calls are no longer in drawdown. We had one set that we bought, and that was the 410s for March 17th. And they're up 3,500 bucks. And then we have the second set, which are the 420s for March 17. Those are up to about $2,000. So we're no longer in drawdown. And we anticipated this potentially happening where this and our hedge trade, which we're getting into next, that's Meta, we're going to work out in our favor. And it looks like that's going to happen. So I'm going to pull up Meta right now, and we're going to move on. And everything's looking okay here. I'm not going to get too far into this because, again, it's a hedge trade. It is working out in our favor. But I see a 1, 2, 3, 4, and potentially 5, or we've already completed 5, and this is an ABC up. And I'm thinking we might just come down and close this gap and get a nice large ABC. I need to see what happens that we regain the 8 EMA. And a lot of this is going to have to do with CPI tomorrow. We could go bullish if this sector goes really bullish. So with that said, I am going to hold into tomorrow, but the reason I'm holding into tomorrow also is because, again, this is a hedge trade, and I have the SPY calls, which are upside exposure. And if they hit 4,000 on ES, those calls are going to get hurt quite a bit. But this is going to pull back most likely too, if that's the case. And this is going to make up substantially what we're drawing down on the SPY calls. And the SPY calls have time. So we're very strategic in what we're doing here. And again, just like on the SPY, you have the bearish momentum, and it's possibly going to confirm to remain bearish momentum. And there's a lot more room here. And even if we come up, the risk of a divergent high, if they try to bring this back up and make a new high, is so high at this point, I don't see it happening just yet. So even if we start to come back up, I'm going to have time to react. So I'm keeping this on as of right now. And that position is up, let's take a look, $3,500. Not bad for 2 weeks work, even though we've had much better weeks coming into this week. But again, the market's a little unclear. The last ticker that we're going to go over, and I can't take credit for this one, and this wasn't on the watch list. This was actually found by one of our members. His name, and I hope I get this right, is Nicholas Troda. You can correct me if I'm wrong. You can send me a message. And yes, I asked him permission to put him out there and shout him out for this. But he found what might be a very good trade, and that is on BA. So let's pull up BA right now and go over what I discussed with him. So I'm going to clear the chart, and we're going to zoom out so we can see the bottom. So we have the bottom right here, and we have these 2 points right here. And this, when I see something like this, the first thing that comes to mind, because it's so small, is that, is this a wave 5 or the end of a correction right here, or something, the end of something? So the next thing I'm going to do is I'm going to go look at the RSI to confirm it, because the price action is telling me that. And look, we have nice pop in volume right here to confirm that could be a new structure. When we look here, see this low, and then this is where our bottom is. We have bullish divergence. Price is coming down, RSI is coming up. That tells me this is the beginning of something new potentially. So with that said, my first thought is, do I have 5 waves in here? And I can count 5 waves in here. And I can count, it's a little bit unclear, but I can count a corrective structure in here as well. So that tells me that this might be wave 1 and wave 2. So the next thing I want to do is I want to look at where this retraces to. And it retraces to right around the 786 retracement. That's very telling, because the 786 retracement is a very common wave 2 pullback target. I'm thinking this is wave 1 and wave 2, so I want to know how far in wave 3 we've gone. To get wave 3, the most common target for wave 3 is the 161.8 extension of 1 and 2. And when I pull that up, we hit it to the penny. And again, I can't take credit for this because these targets, this 161.8 target, was actually found by our member using the education that we gave him here. So he found this. So what am I expecting from this point? Well, the first thing I want to do is I want to confirm that this wave 3 is not going to extend to maybe even the 261.8 extension, which would be way higher up there, because this is a pretty bullish move. The degree of this movement upwards is pretty sharp. So to do that, I'm going to rely on a tool that I use a lot, and that's the volume profile. And there's a lot of market structure in here. So I'm going to measure it with a volume profile. And let's see, that's too high. Right there. Using this coming up and coming back down, the last rejection of higher prices. And what do you know? There is a huge volume node right here, which tells me they're going to have to come back and look for liquidity, more buyers who are willing to get in at lower prices to break this level. So we're looking at a pullback, which tells me that wave 3 is over. We're going into wave 4. Wave 4 target is typically the 382 or the 236 if it's really bullish. So let's pull that up. So our 236 is right around 195. And our 382 is right around 180. Now when I zoom out from here to try to determine which one of these it is, we have a little bit of structure in here, and we have a lot of gap right here. There's nothing really here, which means that maybe I should be looking over here is what I'd think, right? So we have this structure right here, and it's a rejection of lower prices, which directly relates to what we're working with right here, right? So what I want to do is measure all this right here. When I do that, I get something that lines up very closely with the 382. Possibly even the 0.5, but I would lean towards this being more bullish if it's going to continue going up and the Dow is going to continue going up. So I would think maybe in this area of 180. From there, if that is the wave 4 pullback, we should be looking for 5. So to get 5, it's typically equal to wave 1 or the 61.8 extension of 3 and 4. So we come down to the bottom of 3, we go up to the top, and then we come down to 4. And that would put our top right around 242 in that area. So we would be looking for something like this. Pull back, and then go. What we have here is your forecast or your potential forecast. The next thing we need to do is find out if we have a trade in here. So let's go in here and start looking around. And I'm going to take some of this off. Let's take the ADX off. We don't need that. And what I really want to focus on is the RSI. So this is another thing that our member found. This is how he decided that this might be a short trade. You see, we have a lot of divergence in here. We have it right here and we have it right here. Now, if you saw the educational video we put out last week, you don't just short divergence. You don't use this to make an entry. You use the price action. So we have a rejection, we have the arrival at the level, we have the reaction, and this might be the test. So where do you get in? Well, you can potentially short off the top, but this is a pretty aggressive move up, like I said. And the last thing you want to do is short off the top and be wrong if you're not using good risk management. And keep in mind here, you have resistance here, but technically the target's up here. So you could reject, come back up, and then reject this level, and then your short's going to be hurting. And if you place your stop in between here and here, you're going to stop out. You place your stop up here, that's kind of far away. I don't know if that's going to fit into your risk management. It might for me, but depends on what kind of trader and what your risk profile is. What I would be more inclined to do is there's clearly a trend here coming up. Not only is there a trend coming up, but I see pretty clear support right here. This giving way is a short signal confirmed by this divergence that it's playing out, and that would likely give you a pullback. The same with this level right here. This level would probably be even safer. Now, keep in mind, again, you have the arrival at the level. If we break it, it's the reaction. There's a potential of a back test. So you need to determine where your risk is. I would not short at the arrival. The reaction, I might short or start putting some on. I don't know in this case if I would wait for the back test, because in corrective structures, because of fear, a back test is not always guaranteed and you might miss your opportunity. Same goes with this level. You're going to have to determine which one you want to trade off of. If I were choosing, I'd probably choose the trend, because once the trend is over, that's pretty much it. And I can always take my trade off right here if I start to see a rejection at this level, and it's going to be a false breakdown. Once you're in the trade, you got to manage your trade. Ultimately, what I would be looking for is this would be your first target, and I would look to see what happens in the 200 area. Once we get down to there, I still think we're coming down here, but I wouldn't ignore your trade, because the laws of alternation state that if wave 2 is a sharp pullback, this might not be as sharp as you anticipate. But again, there's a pretty telling point of control in here where there was this rejection of lower prices, and this might need to be taken out again. So that's what I'm looking at on BA. Again, I didn't find this. This is a shout out to you, Nicholas, because I think we're going to make some money here, and I'm going to keep you up to date. I am keeping this on my watch. I want to short this coming down from one of these levels, and then if this does find support in this area down towards the pivot, I want to go long this and go long this all the way up through wave 5 if it's going to play out that way. So this is going to be on the watch list, and we're going to be monitoring this closely. If any of you else have tickers you want looked at or find something like this, bring it to my attention and I will share it with the group and give you credit for it. That's all I got for you guys today. I will see you tomorrow.